Hi everyone, it's Deanne Burley, radio talk show host with the Deanne Burley Show on Blog Talk Radio, Truth Radio, and then also my program's called Detectors, which is on Monday through Friday from 6 p.m. Central Time and 9 p.m. Central Standard Time on Saturday. The answer, mortgage fraud, Wells Fargo. The answer to mortgage fraud is right now in being settled with the Wells Fargo case. Now let me explain what's going on. And this is why I'm putting these things out here for basically teaching people that it isn't a situation you need to put your head under the cover and under a blanket and just let them bang at your door and take you away. There's things that you can do right now to look into the aspect of fraud with your mortgage cases. I've been involved with the mortgage industry for quite a long time and know the ins and outs. Being in fact, I was director of one, and I also worked in the courts, and I know things that others don't in many ways. I am a forensic investigator, and right now there's forensic mortgage workers are out there, and they basically are working on these cases to help people. I'm one of them. Now here's a good example of what I've been talking about on the other broadcast. U.S. seizes on ruling to boast Wells Fargo mortgage fraud cases. This was published on the 25th of this month. Okay, and let me just read this to you. In New York, the Justice Department has promptly capitalized on a court victory to bolster a case before another federal judge, citing a ruling on Wednesday that endorses the agency's use of a little-known financial fraud case to prosecute bank actions during the financial crisis. In a letter made public on Thursday, the agency told District Judge Jesse Furman on Wednesday that this ruling is one reason why its mortgage fraud case against Wells Fargo should not be dismissed. U.S. District Judge Kaplan made that ruling in a lawsuit against the Bank of New York Mellon, which the Justice Department accuses of overcharging clients for trading currency. The government's case against Wells Fargo and NY Mel, and the third lawsuit against Bank of America rely on part of the Financial Institution Reform and Enforcement Act of 1989. Which is FIRREA. The law addresses fraud during the savings and loan crisis of the 1980s and 1990s, in which hundreds of U.S. thrifts failed and prompted a multi-million-dollar government bailout. Stu Webb is my friend, and Stu Webb was the one that brought up the savings and loan scandal in the Keaton Five. Keaton Five, again, Bob Dole, not Bob Dole, but anyway, look up the Keaton Five and you'll find out who was there. Anyway, let me go back on this again. The law addresses fraud during the savings and loan crisis, as I said. In recent years, U.S. authorities have turned to the law to pursue cases arise from the latest financial crisis because it carries a low burden of proof while providing broad investigative powers and a long statute of limitations. In the 81-page ruling, Kaplan in Manhattan on Wednesday ruled that the Justice Department can proceed with the lawsuit against BNY. The judge said it was entirely consistent with the text and purpose of the statute to hold this institution liable for its conduct. Filed on October, the lawsuit against Wells Fargo accused the bank of certifying thousands of mortgage loans for Federal Housing Administration insurance, despite knowing that it had inadequately assessed borrowers' ability to make the payments. In the course of his ruling, Kaplan rejected the Bank of New York Melton's argument, the same argument asserted by Wells Fargo in its litigation. Lawyers with the Office of the Manhattan U.S. Attorney wrote in this letter. The letter followed a hearing last week in which the lawyers for Wells Fargo argued the government was misusing the law which permitted it to pursue civil penalties against anyone who commits a fraud that is affecting a federally insured financial institution. The government is essentially alleged that Wells Fargo engaged in fraud that put itself at risk, an attorney for Wells Fargo argued. Kaplan rejected a similar argument in an 81-page document file opinion on Wednesday. U.S. Attorney, a U.S. Judge, Jed Radoff, is set to hear the argument on April 29th on the government's use of the law in the case accusing Bank of America Corporation of unloading more than $1 billion in losses into toxic loans onto Fannie Mae and Freddie Mac. A spokesman for Wells Fargo did not want to comment. The case is in the case is United States of America versus Wells Fargo, N.A., U.S. District Court, Southern District of New York, number 12-07527. Now, again, this was initiated in a story written by Fox Business. A lot of people don't know this is going on, and again, this stuff can be used. Again, nobody tells anybody anything. You go out, you have a loan. You get a loan, and you think that's it, and you think that when somebody tells you you're guilty of something, immediately you're guilty. You don't fight back. You don't ask any questions. You allow people just to take your property, and then you end up in the street. Your credit is ruined. And it goes on and on and on because nobody takes initiative. In fact, if you had read through the original contractual agreement, you would have seen some of these situations in the get-go. But again, you relied on your attorney and whoever it was that looked at these things and didn't tell you the fine print of what it is that you were signing. Some of you guys out there just signed because you wanted a loan. Others just said, okay, well, whatever. And that's where you are right now, in whatever land. So if you want to get out of this mess, there's ways of doing it. Again, it is not a situation of just clear-cut, okay, he's coming in with summary judgment against me. I'm not going to show up. You're going to be in the street. If you fight back, you need to know what you're fighting back and how to fight back. If you don't understand the court system, you don't understand filing lawsuits and litigation, and that's why there's attorneys. This is the reason why there's problems, because pro se litigants don't understand the rules of the court. They don't understand the paperwork that needs to be filed. They don't know the timeliness that has to be filed, and they don't understand what it is that they have to present before the judge to get the judge to listen to you in the first place. It's bad enough for you to come in as a pro se litigant. Most judges won't adhere to you because you're not backed by any one of them, a lawyer. I'm telling you the truth. The money has to be clearly moved to say one way or another. So now, if you want more information on these things, please listen to my show, The Burley Show, 6 p.m. Central Time, Monday to Friday. If you need help with a forensic audit, call me at 630-683-7199. Email me at DANNE.BURLEY@gmail.com. Like to hear you and like to hear your comments. I'm on Twitter, Facebook, and I'm hoping that you will join us and become a part of my listenership. Thank you very much. Have a nice day.